Ladies and gentlemen, what you're about to hear will fundamentally change how you see the global economy. Right now, at this very moment, the United States dollar, the currency that has ruled the world for 8 decades, is facing the greatest existential threat in its history. And the architect of this threat? China, with an $8 trillion arsenal and a strategy so audacious it could redraw the entire map of global finance. This isn't speculation. This isn't theory. This is happening right now, and by the end of this video, you'll understand why the next decade could witness the fall of American financial dominance and the rise of a new economic superpower. The numbers don't lie, and they're absolutely staggering. China currently manages over $8 trillion in sovereign wealth through its various state funds, making it the second largest sovereign wealth manager on the planet. But here's what should terrify Washington. China isn't just sitting on this mountain of wealth, it's weaponizing it. Over the past 5 years, Beijing has been systematically dismantling its dependence on the US dollar in a coordinated campaign that spans every continent and touches every major commodity market on Earth. We're watching the greatest financial chess game in human history unfold in real time, and most people have no idea it's even happening. Let's start with the Treasury holdings, because this is where China's strategy becomes crystal clear. For years, China was the largest foreign holder of US Treasury securities, effectively financing American government spending and keeping the dollar strong. But that era is over. China has been quietly, methodically dumping US Treasuries at an unprecedented rate. In recent years, China has reduced its Treasury holdings by hundreds of billions of dollars, dropping from over $1 trillion to approximately $775 billion by late 2024. Think about what that means. China is deliberately walking away from dollar-denominated assets, sending a message that echoes through every trading floor from New York to London to Tokyo. We don't need your currency anymore. But China isn't just selling treasuries and hoping for the best. Every dollar they pull out of US government bonds is being redirected into something far more strategic, something that has retained value for 5,000 years, gold. And the scale of China's gold accumulation is nothing short of breathtaking. The People's Bank of China has been on an unprecedented gold buying spree, adding to its reserves month after month with mechanical precision. By the end of 2024, China had purchased over 300 tons of gold in the previous 2 years alone, bringing its official reserves to approximately 2,180 tons. But here's the kicker. Most analysts believe China's actual gold holdings are far higher, potentially double or triple the official numbers, because Beijing has been encouraging state banks and private citizens to buy gold while keeping much of it off the official books. Why gold? Because gold is the ultimate hedge against dollar devaluation. It's money that no government can print, no central bank can devalue, and no sanction can freeze. China learned a critical lesson watching Russia get cut off from SWIFT and have its dollar reserves frozen after the Ukraine invasion. That lesson: if you hold your wealth in dollars or dollar-denominated assets, you're vulnerable. Gold eliminates that vulnerability. It's the ultimate financial insurance policy, and China is buying it like there's no tomorrow. Now, let's talk about oil, because this is where China's strategy shifts from defensive to offensive. For decades, the petrodollar system has been the bedrock of American financial hegemony. Every barrel of oil sold anywhere in the world had to be purchased in US dollars, creating permanent global demand for the greenback. But China, the world's largest oil importer, has been systematically dismantling this system. Through the Shanghai International Energy Exchange, China launched yuan-denominated oil futures, and it's been using its massive purchasing power to force oil producers to accept payment in yuan instead of dollars. Saudi Arabia, the United Arab Emirates, Russia, and Iran are all now selling oil to China in yuan, and the volume of these transactions is growing exponentially. The numbers are staggering. In 2023 alone, China imported over 11 million barrels of oil per day, much of it now settled in yuan rather than dollars. That's billions of dollars in daily transactions that used to support dollar demand, but now support the yuan instead. And oil is just the beginning. China is applying the same strategy to every major commodity: natural gas, copper, iron ore, soybeans, wheat. Beijing is essentially telling the world's commodity producers, you want access to our 1.4 billion consumers? Then you'll accept our currency. And one by one, countries are saying yes. This brings us to BRICS, the economic bloc that has become the vehicle for China's de-dollarization crusade. Brazil, Russia, India, China, and South Africa, now expanded to include Iran, Saudi Arabia, the United Arab Emirates, Egypt, and Ethiopia. Together, these nations represent over 45% of the global population and more than 35% of global GDP in purchasing power parity terms. And at every BRICS summit, the same conversation dominates: how do we reduce our dependence on the US dollar? The answers are taking concrete form. BRICS nations are establishing bilateral trade agreements that bypass the dollar entirely. Russia and China now conduct over 90% of their trade in rubles and yuan. India and the UAE have set up rupee dirham trading mechanisms. Brazil and China are settling trade directly in reais and yuan. The BRICS New Development Bank, with over $100 billion in authorized capital, is issuing loans in local currencies, not dollars. At the 2024 BRICS Summit, serious discussions took place about creating a BRICS common currency or a gold-backed settlement system that would allow member nations to trade without ever touching the dollar. This isn't idle talk. Working groups have been formed. Technical specifications are being drafted. The infrastructure is being built. And then there's the digital yuan, China's central bank digital currency, and this might be the most revolutionary weapon in Beijing's arsenal. While the United States debates whether to even create a digital dollar, China has already rolled out the eCNY to hundreds of millions of users. By November 2025, the digital yuan had processed transactions worth approximately 16.7 trillion yuan, about $2.38 trillion. And on January 1st, 2026, China upgraded the system to allow interest payments on digital wallets, making it more attractive than holding physical cash. Here's why this matters. The digital yuan is programmable money. China can embed it with smart contracts, set expiration dates to encourage spending, track every transaction, and most importantly, use it for cross-border settlements that completely bypass the dollar-dominated SWIFT system. China has already launched pilot programs with Thailand, Hong Kong, and the UAE for cross-border digital yuan transactions. Imagine a world where Chinese tourists travel to dozens of countries and pay with digital yuan, where Chinese companies buy goods from African and South American suppliers using digital yuan, where foreign central banks hold digital yuan as reserves. That world is being built right now, and it's a world where the dollar becomes increasingly irrelevant. Speaking of SWIFT, let's address the elephant in the room. SWIFT, the Society for Worldwide Interbank Financial Telecommunication, processes trillions of dollars in international payments every day, and it's dominated by Western banks and denominated primarily in dollars. It's been one of America's most powerful geopolitical weapons. Don't do what we say? We'll cut you off from SWIFT, effectively severing you from the global financial system. The US has used this weapon against Iran, North Korea, and most recently Russia. But every time Washington weaponizes the financial system, it gives China and other nations more motivation to build alternatives. And build they have. China's cross-border interbank payment system, known as CIPS, launched in 2015 and has been growing at an explosive rate. CIPS now connects over 1,400 financial institutions across more than 100 countries and regions. In 2023, CIPS processed over 125 trillion yuan in transactions, equivalent to about $18 trillion. That's a 50% increase from the previous year. Russia, cut off from SWIFT, has integrated with CIPS. Iran uses it. So do dozens of African and Asian nations tired of dollar dominance and the threat of American sanctions. CIPS settles transactions in yuan, processes payments 24/7 with lower fees than SWIFT, and most critically, it's outside of American control. China can't cut you off because Washington doesn't like your politics. But China's strategy goes even deeper than currency and payment systems. Beijing has been quietly securing control over the physical infrastructure of the global economy, and I'm talking about rare earth elements and strategic metals. These are the materials that make modern technology possible. Smartphones, electric vehicles, wind turbines, advanced weaponry, satellites, everything that matters in a 21st century economy. And China controls approximately 60% of global rare earth mining and over 85% of rare earth processing capacity. Let that sink in. China can literally choke off the supply of materials essential to Western economies and militaries. China has also been extending loans to developing nations through the Belt and Road Initiative, over $1 trillion deployed across 150 countries, and many of these loans are denominated in yuan, not dollars. When countries like Sri Lanka, Pakistan, or various African nations find themselves unable to repay, China doesn't demand dollars. It takes control of ports, mines, infrastructure, securing long-term strategic assets and resources. This isn't just debt trap diplomacy. It's the construction of a yuan-based economic ecosystem that operates parallel to and increasingly independent from the dollar system. Now let's zoom out and look at what's happening in central banks around the world, because this is where we see the cumulative effect of China's strategy. Global central banks are diversifying away from the dollar at the fastest pace in decades. The dollar's share of global foreign exchange reserves has declined from about 70% in 2000 to approximately 58% by late 2024. That might not sound dramatic, but in the world of reserve currencies, it's a seismic shift. Central banks in Asia, the Middle East, and even Europe are increasing their holdings of yuan, gold, and other non-dollar assets. The yuan now accounts for approximately 2.7% of global reserves, up from essentially zero 2 decades ago. And that share is accelerating as more countries seek alternatives to dollar dependence. The reasons are obvious. U.S. sanctions have been weaponized so frequently that holding dollars has become a geopolitical risk. Countries watch as America freezes hundreds of billions in Russian reserves and think, that could be us next. So they diversify. They sign currency swap agreements with China, allowing them to trade yuan directly without going through dollars. They join the Asian Infrastructure Investment Bank, China's answer to the World Bank, which has 106 member countries and provides development financing in multiple currencies. They participate in China's Regional Comprehensive Economic Partnership, the world's largest free trade agreement covering 30% of global GDP, where intra-regional trade increasingly happens in local currencies. Here's where the strategy becomes truly brilliant. China doesn't need the yuan to replace the dollar overnight. It just needs to create viable alternatives for different use cases. Want to buy oil without dollars? Use yuan. Need to process international payments outside SWIFT? Use CIPS. Want reserves that can't be sanctioned? Buy gold. Need development financing without Western conditions? Use the new development bank, or AIIB, for digital transactions? Use the ECNY. China is building a parallel financial architecture, and every time the US weaponizes the dollar through sanctions or freezes, more countries migrate to China's system. The geopolitical implications are staggering. American power for the past 80 years has rested on three pillars: military dominance, technological leadership, and financial hegemony. The dollar's reserve status has allowed the United States to run massive trade deficits, finance enormous government debts, sanction adversaries, and essentially print money that the world has to accept. Lose that privilege, and America faces constraints it hasn't experienced since before World War II. Government financing becomes more expensive. Imports become more costly. Sanctions become less effective. The ability to project power diminishes. This is why China's $8 trillion strategy isn't just an economic issue. It's the central geopolitical struggle of our era, and the momentum is clearly shifting. Look at the trajectory. 10 years ago, yuan internationalization was a distant dream. Today, the yuan is the fifth most used currency for international payments, used in over 4.5% of global transactions. China has currency swap agreements totaling over 4 trillion yuan with dozens of central banks. The Shanghai Gold Exchange now rivals London and New York for gold trading volume, and it prices gold in yuan. Major commodities. Exchanges are launching yuan-denominated contracts. Global banks are opening yuan clearing centers. The infrastructure for a post-dollar world is being built in plain sight. But perhaps the most underappreciated aspect of this shift is generational. For baby boomers and Gen X, dollar dominance has been the only reality they've known. It seems permanent, inevitable, like gravity. But for millennials and Gen Z coming of age in Asia, Africa, and Latin America, the world looks very different. They're growing up using digital yuan for payments, studying at Chinese-funded universities, working for Chinese companies, living in cities built with Belt and Road money. For them, China isn't a rising power. It's already risen. And the yuan isn't a challenger currency. It's simply one of several currencies they use regularly. This psychological shift, this change in perception, might ultimately matter more than any economic statistic. Now, I know what some of you are thinking. The dollar has been declared dead many times before, and it's always survived. The euro was supposed to challenge it. Didn't happen. Bitcoin was supposed to replace it. Hasn't happened. Why should we believe this time is different? Fair question, and here's the answer. Those previous challenges were either regional, like the euro, or lacked state backing, like Bitcoin. China's challenge is different. It's a coordinated, state-directed, multi-decade strategy backed by the world's second-largest economy, its largest trading nation, its biggest manufacturer, and increasingly, its most innovative technology sector. China has the scale, the patience, and the motivation to sustain this campaign for generations if necessary. And unlike previous challengers, China isn't trying to destroy the dollar overnight. It's building parallel systems, creating options, gradually reducing dollar dependence across hundreds of millions of transactions. Death by 1,000 cuts, not a single blow. There's also a critical difference in the global context. When previous challenges to the dollar emerged, America was unambiguously the world's dominant economic power. Today, that's no longer clear. China's economy is already larger than America's in purchasing power parity terms. Its manufacturing output exceeds that of the United States, European Union, and Japan combined. Its technology companies rival or surpass American firms in artificial intelligence, 5G, electric vehicles, renewable energy, and quantum computing. Its infrastructure is newer and more advanced. Its population is more than 4 times larger. And critically, its government can implement long-term strategies without worrying about election cycles or partisan gridlock. In a contest of sustained economic planning, China has structural advantages. The American response has been predictable, but ultimately counterproductive. More sanctions, more restrictions, more weaponization of the financial system. Every new sanction regime pushes more countries toward Chinese alternatives. The CIPS Act and export controls on semiconductors to China might slow Chinese technological advancement temporarily, but they also accelerate China's drive for self-sufficiency and incentivize the global South to hedge against over-reliance on Western technology. Decoupling isn't happening on American terms. It's happening on Chinese terms, with China building independent supply chains, payment systems, and trading networks. And here's the uncomfortable truth that Washington doesn't want to face. Much of the world is ready for alternatives to dollar hegemony. Latin American nations tired of IMF austerity, African countries frustrated with World Bank conditions, Middle Eastern oil producers seeking better deals, Asian manufacturers wanting lower transaction costs, European allies uncomfortable with exposure to U.S. political decisions. These nations aren't necessarily anti-American, but they are pro-optionality, and China is offering them options that didn't exist a decade ago. The timeline for this transition is the big unknown. Some analysts think we're decades away from any meaningful challenge to dollar dominance. Others believe we're already past the tipping point and the world just hasn't realized it yet. The truth is probably somewhere in between. Over the next 10 to 20 years, we're likely to see a gradual but accelerating shift toward a multipolar currency system. The dollar won't disappear, but it will share the stage with the yuan and possibly other currencies in ways that would have been unthinkable in the year 2000. America will retain significant advantages, its deep capital markets, rule of law, and innovative economy, but it won't have unilateral control over the global financial system. And for a nation that has enjoyed that control for 8 decades, the adjustment will be painful. So what does this mean for you? If you're an American, understand that the lifestyle you've enjoyed, cheap imports, easy credit, government spending without immediate consequences, is partially built on dollar hegemony. As that erodes, expect higher prices, higher interest rates, and more constraints on government policy. If you're anywhere else in the world, the changes could be even more dramatic. Your country might find itself choosing between the dollar system and the yuan system, between aligning with Washington or Beijing. That choice will shape your economic opportunities, your government's foreign policy, and potentially your personal freedoms for decades to come. For investors, this transition creates both risks and opportunities. Dollar assets may face long-term headwinds as global demand gradually decreases. Commodities, gold, and yuan-denominated assets could benefit from diversification flows. Geopolitical volatility will likely increase as the old order gives way to the new. Understanding these shifts isn't optional anymore. It's essential for anyone hoping to protect and grow their wealth in the coming decades. The financial world that your parents and grandparents knew is ending. The question isn't whether it's ending. The question is what comes next and how prepared you are for it. China's $8 trillion move isn't a single decision or announcement. It's a comprehensive strategy that has been unfolding for years and will continue unfolding for years to come. Reducing Treasury holdings, accumulating gold, settling oil in yuan, expanding BRICS, rolling out the digital yuan, building CIPS, controlling rare earths, financing Belt and Road, all of these are pieces of the same puzzle. And that puzzle, when complete, shows a world where the United States dollar is no longer the undisputed king of global finance. Whether that's good or bad depends on where you sit. But one thing is certain. It's happening, the pace is accelerating, and the implications will reshape everything you think you know about money, power, and the global order. The era of unquestioned American financial dominance is ending. The era of multipolarity is beginning, and China, with its $8 trillion arsenal and its patient, methodical strategy, is the primary force making it happen. This is the biggest story in global finance, and yet most people are completely unaware it's unfolding. But now you know. Now you've seen the evidence. Now you understand what's at stake. The only question left is, what are you going to do about it? The world is changing. The question is whether you'll change with it. If this video opened your eyes to what's really happening in the global financial system, smash that like button, subscribe to stay ahead of the curve, and hit that notification bell because this story is far from over. The battle for the future of money is just beginning, and you'll want to know how it ends.